Good morning, everybody in Tokyo, and good afternoon, good evening, everybody in America. Thank you very much for joining us. I'm going to jump right in because tonight's topic is a really fun topic. There's few things more fun than talking about how much other people get paid and how much more we each should get paid than we do. So let me just jump right in. I first had the idea to do a discussion about CEO compensation in Japan and America when I began to notice that there were several shareholder proposals being filed at Japanese AGM meetings that were proposing that Japanese senior management should get paid more in long-term incentives rather than cash, specifically in stock. And one of those activists who were making such proposals is one of our speakers tonight, Jamie Rosenwald, who is co-founder of Dalton and the guy who has listed an activist fund on the London Stock Exchange called Nippon Active Value Fund. So I first had the idea for a debate about compensation when I began to notice those proposals. But secondly, if you've attended any of our other events, you'll know that the project on Japanese corporate governance and stewardship here at Columbia is not just at looking at Japan, it's at making some international comparisons, and particularly the extremes on which we find the United States system of capitalism and the Japanese system of capitalism. They couldn't be more extreme. And the issues of shareholder capitalism versus stakeholder capitalism are becoming increasingly, drawn towards each other. And there's no sharper divide on this issue of stakeholder versus shareholder than executive compensation. Now, in the UK, and to a lesser extent in the United States, there has been enormous pressure to keep a lid on executive pay, and there's been an increasing focus on the disparities between worker and CEO compensation. In America, clawbacks of previously paid bonuses are becoming more common. In fact, today's FT had on the first page an article about Gary Cohn, formerly of the Trump administration, and previous to that, a president of Goldman Sachs, was refusing to give back some of the compensation that he had earned during the time that Goldman Sachs was involved in a horrible scandal, corruption scandal in Malaysia. And in Japan, you have people like Andy Saito, the previous head of the Tokyo Stock Exchange, insisting that Japanese CEOs should get paid more. Western investors have long accused Japanese CEOs of not paying attention to shareholders, and that seems to make them bad CEOs. And yet in the United States, there are some CEOs, such as the co-founder of Southwest Airlines, that have always taken a very stakeholder approach. He says that, you have to take really good care of your people. They will then take really good care of your customers, and then investors will be happy. So it's not as if this dichotomy is cut and dried on either side. I am grateful to Stephen Greenberg, who is a senior executive at Heidrick and Struggles, one of the world's leading recruitment companies. And more important than that, he's a fellow SIPA alum. But I'm grateful to him for adding the tagline to the title of this event, Does It Matter? Because there are great CEOs in Japan and the United States who get paid vastly differently. And there are terrible CEOs in Japan and the United States who get paid vastly differently. So clearly compensation is a measure, but it's part of a system. It's a reflection of the specific role of the CEO in Japan and the United States. That role is different. In Japan, the old cliche is that the CEO is simply the most senior employee, whereas in the United States, the cliche is the CEO is the head visionary. But the role is changing in both countries. CEOs in Japan are being actively challenged, learning how to deal with activist assaults on their management styles. And in the United States, demands from increasingly strong investors to meet ESG and sustainability goals are also increasing and forcing them to rethink their role as CEO. So it's also important in terms of compensation, like who pays it, who decides it, how is performance measured? And I don't want to spend a lot of time talking about Carlos Ghosn, but it was the scandal of Carlos Ghosn and his pay that brought these issues of executive compensation right to the forefront of the debate in Japan. And those issues and the debate has resulted in a number of new disclosures and guidelines. Mr. Tsukuda, who is a former head of the Aegon Zender office in Tokyo and who is now CEO of a board advisory company, he's also a member of the FSA expert committee, who is now currently discussing some of the changes in the codes. So he may have some updates for us on these issues. Another great divide between the United States and Japan is the issue of firing CEOs. Japanese CEOs virtually never get fired. Why is that? Some resign, many resign. Recently, we've had the CEO of JPX, Dentsu, Suzuki, Toshiba, Japan Post, and other companies resign. In the United States, they do get fired. They get fired like crazy. The average tenure of a United States CEO is now down to 5 years. And when they do get fired, maybe they walk out the door with a smile. For example, the former CEO of Boeing, who was forced out because of the planes that fell out of the sky and killed hundreds of people, managed to leave his job with a bonus of $60 million. That doesn't happen in Japan. So what it boils down to in case of compensation is who has the power? How is that reflected in compensation? Compensation is also a reflection of how systems filter the best talent and what sort of oversight is put around the CEO. And how well the CEO, whether it's in Japan or anywhere else, manages the board and manages and respects the diversity of opinions of his staff and his colleagues. Big shareholders and boards of directors in the United States seem very happy to use more and more power, to amass more and more power, and to use it against the CEO. In Japan, the CEO theoretically has almost imperial power, although that's changing. And that has a reflection on how much he is paid. It's always a he. So compensation in both countries is bound to change. And I'm glad we have such an amazing array of people here tonight to help us walk through those issues. I'm going to walk through a series of 4 or 5 slides very quickly, just to give you some baseline facts. Then I'm going to turn it over to each of our panelists for 5 minutes or so to talk about their points of view. Then we'll open it up for discussion. I hope you'll have a lot of questions. Please list them, put them in the Q&A box, and we'll get to as many of them as we can. So I'm going to, again, share some slides with you very quickly. Where am I? I'm going to start at the beginning, a very good place to start. So here is a chart that came from Nikkei. I'm sorry I didn't source it, which lists the top 10 paid Japanese executives last year. First thing to note, they're almost all from SoftBank. They almost all have foreign names. And if you look at the compensation, just kick off to the last 2 digits and say millions of US dollars, not that far off from what we see in America. But again, they're a very special list of people, and they are heavily weighted towards firms like SoftBank. So we can hardly say this is representative of average Keidanren company CEOs. Very quickly, this just shows you different countries, the division between base pay, annual bonuses, and long-term compensation. And you can see that the US and Japan, again, are at opposite sides of this chart, as I began by saying. This is really a beautiful graphic because it just shows the difference so strikingly. In the United States, executive CEO compensation, the difference in the size of the bars between the US and Japan is quite staggering. And also, if you look at the tiny, tiny, tiny blue spot of Japan, which shows how much incentive, long-term incentive pay makes up the total of a Japanese CEO's compensation. Again, just to repeat what I said, the median tenure of a US CEO at a large cap company is now down to 5 years. I've read that if you look at the average of all S&P companies, the average is 5 years. That hasn't changed in the last couple of years because corporate profits have been so strong. So there's been less incentive for the boards to kick out the CEOs. But we can have a discussion about whether this is too short, whether the ability of boards and investors to dismiss a CEO is productive or not. Here, very quickly, is the disparity between CEO pay and average worker pay. It's just to make a point how out of whack the US is with the rest of the world. Japan doesn't even make it onto this chart. And finally, this is a really interesting chart I hope we'll talk about. It just shows that in Japan, the number of CEOs that are recruited from outside the company is minuscule. I have no idea how PwC defined outside the company, because obviously in the United States, somebody who comes from outside the company might have worked at the company for 5 years, and therefore they're considered an insider. I'm here to tell you that 5 years ago, I sat in front of a Bloomberg machine with a graduate intern for a month, going through every single bio of every single Japanese CEO in the first and second section TSE. And when you eliminate people who were sent from main banks to be CEO, when you eliminate people who are sent from parent companies to be CEO, we came up with 19 CEOs who are not founders, who are not sent by the parent company, who are not sent from the main banks, but who were recruited from outside the company to serve as CEOs of a major Japanese listed company. And that is certainly a characteristic which is very specific to Japan. So I'm going to stop sharing, and I'm going to turn over the podium to Stephen. And please take it away, Stephen.
First of all, thank you, Alicia, and it's great to be back at Columbia, although I can't physically be there. Just to give a little bit of background, and I'm not going to do a very long introduction, but in preparation for this, so as you know, what we do is we advise companies on talent, leadership change, whether it be from the CEO level, direct reports, board, and so forth. In preparation for today's discussion, over the past few weeks, I've reached out and had a number of conversations with CEOs, independent board directors, investment bankers that are now working in Japanese public companies as CFOs, private equity firms, talking about the issue around compensation, aligning compensation to key stakeholders, shareholders, and more importantly, if and how that is impacting CEO behavior and CEO decisions. And I got to tell you, the feedback that I got from the market was actually quite interesting and not, in some ways, not overly surprising. There's the traditional Japanese CEO who, spends his or her, but primarily his still, entire career at the company. His pre-last role is as CEO, and then he moves on to a Sodanyaku or a senior advisor, or he or she gets sent to a group company to act as a CEO or a CFO for a few more years before they take a nice retirement package that is taxed at a much lower rate. They have a lot of respect. They still get a car. They still get a golf club membership, and it's very, very comfortable. And it's very difficult in a position like that to really push against culture and drive change. Another type of CEO that came up is, the professional CEOs. And I think this is something we should talk about a little bit later, but, how deep is the talent pool for professional CEOs? And professional CEOs being CEOs that are willing to take a risk and have a lot more compensation based upon their performance, and are very comfortable with being in a position where the board or the private equity firm that brought them in is willing to say, you know what, we're not happy with your performance, you're out of here. But unfortunately, the number of those CEOs is relatively limited. And then, of course, there's the CEOs who are the founder CEOs who spent many years building a company. They're already extremely wealthy, and the issue of compensation structure is less around how much they're paid and more about taxes and how they can optimize the future for them. So, and then there's, a few internally developed CEOs who've done amazing things as well. If we think about, for example, Hideaki at Sony, who really grew up in the company, spent a lot of time overseas, but had that internal credibility and was able to lead and drive change and was compensated reasonably well upon his departure. So those are some of the key areas that we focused on, or that I focused on in these discussions. And during the Q&A, I'd be happy to take questions on those topics and anything related to them.
Thank you very much, Stephen. That was great. Jamie, can we go over to you? And I'm sure you have quite a unique point of view, as usual.
Alicia, thank you for including me on your webinar. I am the pain in the neck activist that is requesting Japanese senior management and board of directors to increase their compensation in the form of long-term comp. And as the government has changed the tax law, it encourages restricted shares to be utilized as the long-term comp vehicle. My personal belief is that behavioral economic theory actually works, and incentives and alignment of interests are critical to the long-term interests of all stakeholders. And if Japanese management, especially those managements that are at what I call salaryman companies, which make up about 80% of all Japanese companies, if salaryman managements were owners of their companies, as many managements around the world are owners of their companies, I believe the behavior would change significantly, and there would be a greater balance between stakeholder benefits and management and employee benefits. And all you have to do is really see the changes that occurred in the United States in the 1980s when private equity came into the system and provided long-term compensation to managements. And the performance that was generated was spectacular. Now, we can argue whether the pendulum has swung too far to the benefit of the employee and management boards. And I think it has. And I agree with Jamie Dimon's view, illustrated last year, that management's boards and shareholder compensation has gotten too far versus stakeholder compensation. And so there is, as Alicia indicates, I believe, a happy medium. And sadly, Japan is so far on the side of small comp that dynamic entrepreneurial thinking and utilizing assets and making them run as fast as they can has been absent in the 80% of the companies that what I call salaryman managements, versus the 20% of companies who are owned by entrepreneurial families, whether it's the first generation like SoftBank or multiple generations like many other companies, where entrepreneurial spirit does exist. And that is why those owner-operator companies have vastly outperformed the competition over the last 25 years. So I don't want to dwell too far on our activism at this point. I'd rather have people ask questions. So my background, just as a quickie, is I've been an investor in the equity markets in Japan since 1972. And my family has been involved in the Japanese equity market since 1963, when the Japanese Nikkei was at 1,000. So the family has seen the Nikkei go from 1,000 to 39,000 back to 26 today. It's been an interesting round trip. Nonetheless, I'll open it up to Alicia and questions, hopefully.
Yeah, thank you for that, Jamie. I also wanted to mention, that it's not just people like Jamie who are espousing these kinds of views. As I mentioned, Mr. Saito, who is a well-regarded leader in the business community, had a long interview with Bloomberg a couple of years ago when he just made this case very strongly. And he said, if you look at people who have a stake in their business, not just founders like Heidrick and Kyocera, but that they are incentivized to take risk instead of wait around and do nothing and wait for the retirement packages that Stephen Greenberg just described. So it's not just Jamie who is making this point about higher pay for higher risk taking in Japan. I'd now like to turn it over to Mr. Tsukuda, who I think also has some slides to share with us. And Tsukuda-san, in addition to the various high-level roles I described that he has and is performing, he's kind of a trailblazer in executive coaching in Japan and board evaluation in Japan. So I couldn't have thought of a better candidate to bring into this discussion. So I'm eager to hear what he has to say. Take it away, Tsukuda-san. Thank you very much.
Thank you, Alicia, and thank you for including me in this very interesting, discussion. Let me share with you a few slides which I prepared for this session. Let me first explain the difference between Japan and the US or the rest of the world. As you can see, on the left side, I described, how the Japanese companies organized and how the Japanese companies are like. As Steve explained and Alicia explained, the CEO is just one step to the chairperson or even to the senior advisor. And the current CEO appoints his or her successor. And when he or she is appointed as a CEO, there is no comparison with outside candidates. So there is no competition against market. And talking about the Japanese board, majority of the board of directors are CEO subordinates. I think this is a very unique point. And in general, we are said that we are moving from the multi-stakeholderism to the shareholderism. But my question here is that, okay, is Japan really the multi-stakeholder now? Are employees happy? I think that's the question which maybe we can ask later. And on the other hand, the US and maybe the Europe, I think the principal agent theory is very important. So CEO is viewed as an agent of shareholders, not ultimate manager. And of course, nomination committee appoints CEO, and the CEO is selected from the talent market. So the internal candidate is benchmarked against the market. And if there is no internal qualified candidate, they will hire from outside. And of course, board monitors CEO and the management team. So I think, in short, I think in the United States, the board is very important in terms of its fiduciary duty towards the shareholders, which is lacking in Japan. So that is the first comment I would like to say. And the second point is about the difference of the Japanese culture from the one in the US. And on the left side, you can see the famous culture map, which is from Eddie Mayer, the visiting professor of the INSEAD, I think. And as you can see, we have a huge difference in terms of culture, like a high context versus low context, hierarchical versus egalitarianism, and top down versus consensual, and anti-confrontational versus confrontational. But I think all these characters lead to the roadblock to high compensation in Japan. And of course, you remember this famous proverb, like on the right side, the nail that sticks out gets hammered in. So Japanese CEOs don't want to be seen as, oh, he gets a lot of salary or the bonus by the other executives in the business community. And also, we do have this concept of honorable poverty, I think, which is quite different from the beliefs in the United States. So all these, Japanese culture leads to the, I would say, like a roadblock to high compensation. And talking about the FSA discussion regarding the corporate governance code revision, we started our discussion in October, and the next Tuesday, we will have our third meeting. And I will just briefly explain the 3 points. First is that in Japan, corporate governance was pushed by the government, not by the corporations, which is very important. The Japanese government is continuing to push, corporate governance reform. And in fact, Prime Minister Suga mentioned importance of corporate governance reform and diversity in his first speech in the Diet. And second, the corporate governance code is expected to be revised in 2021 before the annual general shareholders meeting season. There are a few points which I would like to mention to comment. First is about the minimum 1/3 of independent directors for private market companies. So this is a kind of a minimum standard, I would say, for the Japanese prime market companies in next year. Not over half, but 1/3. I think it's not insufficient, but I think it's a progress. And also there will be, we will discuss later about the nomination committee CEO succession in our FSA council meetings. And also we will see this, we will hopefully see the guidelines of board effectiveness review. Board effectiveness review practice is not yet so much common in Japan. For example, we don't see a good disclosure of the board effectiveness review, which is very important in order to check the corporate governance status of the Japanese companies. So we will see some progress there. And the Prime Minister, Suga stressed that Japan should promote female non-Japanese and importantly, mid-career hires, which may change the game in Japan. In short, we will see gradual shift from management board to monitoring board and globalization of Japanese management, which is in systemic fatigue. The last slide. I strongly believe CEO matters. Of course, compensation is important, but if you don't have the right CEO, the compensation doesn't work. I think the most important thing is we choose the right CEO. So if you look at the Masa Tanaka, the stock price is soaring up. And the Mitsubishi Chemical Holdings, one of the traditional Japanese companies, finally decided to appoint the non-Japanese, recruiting from outside as its next CEO. And it is obvious that they went through the right process of evaluating not only the internal candidates, but also the outside external candidates. So I hope that, by choosing the right CEOs, Japan may change in the long run. Thank you.
Thank you so much for that, Tsukuda-san. That, for me, that had so much that I want to ask you about, particularly your very last comment about Mr. Gilson at Mitsubishi Chem. So I actually have done a little bit of research about the tenure of foreign CEOs in Japan, how they come to be put in place and how long they last. And what it seems to me is that the pattern of foreign CEOs being appointed to Japan is that they tend to be brought in mostly when there's a crisis. So if you look at where foreign CEOs are most heavily concentrated, they were in the insurance sector after the financial crisis in Japan. And what seems to be the pattern is that foreign CEO is brought in, approval rating by shareholders is very high in the first year, and then year by year, as the company begins to be normalized, thanks to the effort of the foreign CEO, that sort of traditional forces kind of reinforce themselves and the foreign CEO is pushed out. And in fact, I think the longest serving foreign CEO in Japan is, of course, Carlos Ghosn, right? So I think it is a challenge for Japan to prove that a foreign CEO in Japan can make it. And even in the case of the CEO of Takeda, Mr. Weber, he again started off with I think it was a 98% approval rating. And then by the time of his third year, it's continuing to ratchet down. So how far away are we from seeing a CEO in Japan, a foreign CEO in Japan, who has lasting power?
I think that's a very difficult question to answer, but I think first, I hope that Chris Weber will be successful because that's very important for the Japanese business community. But I do believe that Takeda is doing very well, despite all the all the different opinions.
Right.
And I think that's because Mr. Sakane, the chairman of the board, decided to support Chris Webber. Without that support, Chris Webber cannot perform. So I think it is very important the board support the CEO.
Absolutely. Absolutely.
Yeah.
Jamie, can I ask you to tell us a few stories, if you like, I don't know if that's the right word, about the reaction you've gotten when you meet with Japanese managements and you make this suggestion to them? I'm not talking about shareholder proposal, but just the conversations you have with them on this subject. What kind of response do you get? Do you ever get, oh, that's a great idea, we'll think about it? Or is it just shut down?
Great question, Alicia. When we approach what I call salaryman managers, and we explain to them why we would like to create this alignment of interest between their compensation and the performance of the shares that we hold for our clients and ourselves, we generally receive a response that is traditionally Japanese, and that the answer is we already receive a very generous compensation from our companies. We are very happy with the compensation we receive, and we believe that what we are receiving at this point is quite satisfactory. That is the general response of a salaryman CEO. Now, in the case, you want a story. So in the case of a company where we put one of Dalton's own Japanese managers on the board of a Japanese company, at his first board meeting, after being elected to the board, there was a discussion of the dividend. And the dividend discussion went like this. Our representative, Dalton's representative, recommended that the company raise the dividend. There was a discussion amongst the Japanese board members that they had raised the dividend in the past, but it hadn't been more than 5 years since the last time they raised the dividend. The CEO, who happens to own 30+% of the company, said that he felt it was uncomfortable for him to raise the dividend because he might be viewed as being greedy, since he would receive the largest single benefit from the increase in the dividend. Now, from an American perspective, this is shocking, absolutely shocking. But as your speaker has indicated, the nail doesn't like to stick out and will be smacked down. And this is a culture of shame. And it was the CEO's view that he would feel shame for being the beneficiary of the dividend rather than other employees or other company members. And he doesn't know the other shareholders, of which Dalton was a major shareholder. So this is what you're dealing with in Japan when a major shareholder says, hey, to an owner operator of a business, hey, why don't you even benefit from this, because it will benefit all shareholders. So the embarrassment is really a roadblock in many cases. Now, over time, we were able to convince him that dividends actually has a huge benefit to share price. And we moved on, and he was willing over the next 4 years to raise the dividend consistently. And the share price went up 4 times. In the case of Masa Tanaka, who your prior speaker mentioned, what he doesn't explain to you is that there is a Chinese owner-operator of Nippon Paint, Mr. Guo, who happens to be a shareholder of your company, Nippon Active Value Fund, which you mentioned. And Mr. Guo chose Tanaka-san because he represented Japan from the standpoint of proper culture, but it was Mr. Guo's operations behind the scene in creating the merger that has produced the incredible share price that was shown on the chart. So I just wanted to point that out as well.
I think we all know Masa Tanaka pretty well, so I'm sure he had something to say about just about everything. But let me give you some follow-up questions. So I have a friend who is on the compensation committee of a Japanese company who says that when they discuss the possibility of paying the top level executives in stock or even increasing their pay, that the pushback is always, well, if we don't give it to everybody, we, the senior management, should not be benefiting. So my question is, I think I've heard you say this. why don't you propose that they give stock to everybody? And if you've done so, what is the reaction to that?
Yeah, so I didn't really realize that there was a CEO in Japan who actually does do that. And
Yeah.
when I finally researched Rakuten and realized that Mikitani-san had actually gotten share ownership all the way down to the youngest and lowest ranks, I was absolutely flabbergasted and quite pleased. And so you can bet that our discussions since then have been all about, well, if you guys feel uncomfortable, how about distributing restricted shares to everybody? And that we've just begun to do. And they look at you like you've just fallen down from the moon, like my background. I mean, literally, you know, I'm on another planet sometimes when I'm asking these questions in Japan.
Okay, so Stephen, what strikes me about what Jamie just said is perhaps, I know a lot of Japanese companies have a tradition of like stock clubs, kabu clubs, and so on and so forth, right? So
Yeah.
Stephen, are those still very prominent, and do people really participate in them? And is that a good thing? Does it just simply are
It's-
golden
So,
handcuffs that prevent people from
so on the stock club issue, I'm not 100% sure, but related to the issue of increasing distribution and having long-term incentive for a much greater part of the employee population and executives. There was one company in particular, it's interesting, of the number of companies I've spoken with over the past few weeks, one of them, they're working very hard at the senior executive level of rolling out a new plan that will be launched next year with phantom shares, going down a few more levels. And it's something that at first there was a lot of resistance to, but they're pushing and they're getting everyone on board. And you've got a CEO in that company, and you've got a board in that company that is really behind it. I think it all goes back to leadership, not only of the CEO, but also of having a board that is willing to push and is willing to look at those right issues. Another company trying to have that conversation, and actually even trying to have conversation about having more long-term incentive for the executive team, they're saying they don't want it. And they're like, look, I'd rather just have cash. And then also, if we talk about the trend towards having more long-term incentive, you know, at some companies, they used to be a third cash, a third bonus, a third long-term incentive. I'm sorry, they've moved to a third, whereas their base cash comp used to be 55 to 60%. Now it's a third, but that dollar amount or yen amount has not gone down. So they still have that base comp that's still quite high, but they've just tacked onto that longer term incentive. And is that really going to change behavior?
Yeah, so let me ask you about that. I mean, you talk to Japanese executives all the time. Have you seen this? I mean, okay, a lot of people that I talk to, you know, often because of my background are bank executives. That's a very regulated industry. It remains a very regulated industry. And I find that some executives I talk to, they'll say, oh, yeah, we get stock as part of our long-term comp. And I say, well, how much do you get? I don't know. What's the stock?
Yeah.
I don't know.
Yeah.
You know,
Yeah.
has it changed your behavior? No. So how do you explain that?
Exactly. It's very difficult to explain. And I think this is, and all of these, and one of these executives, who is a very well-known CEO that has been, I think, mentioned before on this call, on this webinar, you know, we're talking about, this is an evolution, and it's going to take a long time to really get to where we need to be in terms of having compensation aligned with stakeholders, aligned with governance and all that. And I asked him, well, you know, so what do you think that timeline is? And his response was, definitely not before I'm dead. So it's, you know, it's very easy to criticize the system and the structures and so forth, but it takes time to drive change, and it takes real leadership. If we talk about Tanaka-san, he's someone out there who, you know, goes out into the business, meets with the employees, meets with the distributors. You know, it takes real leadership, not someone sitting on the 40th floor drinking ocha all day.
Yeah, most importantly, he also says what he thinks. There's no filter there, right? There is no filter. So I worked for Lehman Brothers, as many people will know, from 2000 to 2006. I always say it's not my fault because I left in 06. But Richard Fuld was never seen on the floor. He had a special elevator that would take him directly to the 40th floor. And, you know, some of us department managers would have breakfast with him or whatever, but he never, ever, ever walked on the floor. So it's, again, you know, the point is that you have good execs you have good CEOs in the United States, you have good executives in Japan. The pay systems are different. So it's not just the pay that determines the outcome. So there is a question here. There's many really good questions here. I want to say in advance, we probably won't get to all of them, but if the people who are asking questions want to email me, I will try to get you an answer either from the speakers or from research that I do. So one of the questions is, could the panelists talk about compensation committees in Japan, how they're functioning, do they use compensation consultants, and are they a vehicle for aligning interests with shareholders, et cetera. And I want to preface this by saying, I think about this a lot because I'm not a lawyer, but my understanding is that the overwhelming majority of Japanese companies are legally constituted so that the nomination, compensation committees, and the audit committees have no legal standing, which means that the CEO can overrule them anytime he likes. And so to my mind, that makes the CEO of a Japanese company who chooses this form of organization so important. Because if he's a jerk, if he's an egomaniac, or if he's asleep, there are no guardrails, right? And the compensation committee, so the compensation committee is like that for most companies, is that they just advise and the CEO can override. So let me raise the horrible subject of Carlos Ghosn. I don't want to talk about what he did or how guilty he is or whether he's not guilty, but the debate was he had the power to decide everybody's comp and his own comp. And I want to ask Stephen and Tsukuda-san whether that was not unique to Nissan, I think. What's the story, Tsukuda-san? Can you help me understand? And what is your view? What's your answer to this question about compensation committees and whether they use compensation consultants and do they do a good job?
Yes, thank you. I'm not a compensation specialist, but I often serve as advisor to the nomination committee, and the nomination committee works closely with the compensation committee. So I know how it is working now in Japan. I think many Japanese companies are already establishing the voluntary compensation committees.
But it's voluntary. It's voluntary.
And maybe more than 80% of the JPX Nikkei 400 companies, and many of the Japanese companies employ the compensation consultants, like Mercer or Towers Watson or the Japanese trust banks, etc. So I see many compensation consultants are advising the Japanese companies. And I think, as a result of that, I think the compensation with the CEOs among Japanese companies are increasing. But again, the Japanese way, gradual increase. So I think, so to answer to your question, I think it started to work. So that's my answer.
But do you happen to know whether the legal situation is that the CEO can sign off, has the ultimate determination over comp of the top executives and of himself?
No, actually, maybe traditionally Japanese companies are still doing that. But, for the, big Japanese companies like, blue chip companies, including like a JPX 400, when they employ the compensation consultant wants to establish the rule, internal rule, how the executive compensation will be decided. The cash, bonus, and the stock. And then they discuss including the independent directors. So I think we are now trying to establish the transparent system, including the external directors.
That's great.
So yeah, so I think the practice is changing, at least among the Japanese big companies.
Right.
Yeah.
Stephen, do you have anything to add? And also, are there other, I mean, in Europe in particular, CEO compensation is increasingly being tied to other things besides the share price or the profits. You know, it's being tied to reduction of carbon footprint or diversity or what it is. Do you see that happening in Japan?
In terms of
And Jamie,
there's increased KPIs tied to it, yes. I would say in terms of, you know, carbon footprint, I personally have not seen that evidence, but what I have seen and have specific examples that have been shared with me are of institutional investors really pushing leadership, the CEO, the board on what they're doing from that perspective before making investment decisions. And so from that perspective, it's definitely influencing, at least some companies, how they're managing those topics. I mean, there's one example where this was a executive director, one of only two in this particular company, where you know, this institutional investor was pushing really on what they're doing to develop also global talent. And I think this is a topic when we think about leadership and the evolution of CEOs in Japan and the development of a professional class of CEOs who can be a CEO of company A in industry A and can move to company B in industry Z. That's really an area that Japanese companies need to work on. And we are seeing more liquidity in the talent market in Japan. I'd say one of the largest parts of our business has become advising Japanese companies on leadership succession and bringing in talent from outside. But the talent pool in that space for truly international leaders, regardless of CEO or functional leaders, is still quite limited. And that's should be of strategic importance to Japanese companies going forward.
Okay, Jamie, why do you think it is so limited? Is it the form of compensation? I mean, is it the, you know, the idea that if you sit around long enough, you'll be given an advisor position after you retire from the company? What do you think?
I think a lot of compensation structures in Japan historically have revolved around the tax benefits or the taxability of the compensation. And what the government threw in the mix, which I think is absolutely critical to the change in corporate governance reform and this discussion of long-term comp, is the fact that prior to 2016, if someone received a stock option, the recipient would be taxed immediately upon receipt using a Black-Scholes model at the value of the option. And lots of Japanese companies did this at the encouragement of international shareholders, etc. And they received these stock options in the 90s, 2000s, 2010s, etc. And what happened invariably was the share price declined and the option expired worthless. And the manager was so upset that they had to pay tax in advance and got no benefit out of it that they said, "Dame desu," when anybody mentioned, you know, giving out a stock option as long-term comp. In 2016, the government, realizing this and understanding behavioral economic theory that works, basically created the restricted stock plan where those who receive the restricted shares pay no tax upon receipt, receive the dividend as if they own the stock, and pay a 20% tax on the dividend upon receipt, which is far lower than their personal tax rate, and receive the vote. And the government, the METI even, the young people who created this plan, even encouraged companies to give between 3 times and 5 times each of these recipients' annual salary, these restricted shares over a period of time. And my own experience is that if someone has 5 times their annual salary in the form of compensation in their own stock in the company they work for, they start to think like an owner. And you want people to think like an owner when they take risk, because That's what gives the entrepreneurial spirit that needs Japan to run faster with the capital that it has on the balance sheets. And if the government's plan slowly works its way in, and I know things in Japan take time, and it slowly works its way in, and you couple that with the fact that activists like me and my friendly competitors, we are going to continue to beat the drum for restricted shares, more alignment of interest, and God forbid an unfriendly takeover happens at a very large company in Japan, the management team, as it did in the United States in the 1980s, will get a clue very quickly.
You know, I have to thank you because Toby Rhodes had put a question in the box about the taxation of RSUs. So you just did me a favor. I was trying to get to his question.
Thank you, Toby. Happy to give you the answer.
You know, getting back to Stephen, your theme about the emergence of a professional CEO or manager class, I've been tracking over the last couple of months since the pandemic, a number of Japanese companies have been announcing early retirement packages, and the number of people who are taking these packages is increasing, and also the average age. I read about 2 big Japanese companies were offering retirement packages for people as young as 30 years old. So my question is, anybody can answer this question. You know, in the 1960s, when I was just in kindergarten and maybe Jamie was around, I remember we had the breakdown of lifetime employment in America. Like in the 1960s, if your dad worked for IBM, he worked for IBM forever, right? And when this started to happen, when companies went under or people started to lose their jobs, you know, they had no choice but to become entrepreneurs or to move around to different companies. Do you start to see that happening yet? Either you or Tsukuda-san can answer this question.
Yeah, I'm happy to start, and then Tsukuda-san, please definitely embellish because you have insight as well. Yeah, I mean, we are seeing, I mean, compared to 20 years ago, the fluidity or liquidity in the talent pool in Japan has increased significantly. And you used to have early retirement programs that were primarily done by daishi that wanted to downsize and so forth. And now we're seeing it more broadly. Where are they going? Not sure. It depends on the individual, their caliber, capability, seniority, all of that, right? And it's interesting. I was talking to a senior executive at one of the major Japanese global financial institutions 20 years ago. After 10 years of employment, new grads, like 85 to 90% would still be at the firm. Now it's down to like 50% because there is increasingly, I think, frustration by, okay, I have to spend 30 years here. I'm never going to be able to make more than the senior executives until I'm 55, 57, 62. And they see certain, you know, young entrepreneurs going off, creating tech companies and doing exciting things. And so there's an attraction for some to take risk and to go out and innovate and try to build a company. I think that's great. We just need more of it.
Mm. Do you see that happening, Tsukuda-san?
Yes, I see the same trend. And I heard from several people at the Tokyo University that the best and the brightest students will no longer go to the Japanese big companies. They start their own company.
Mm. Yeah.
That's the best news I've heard all day. Congratulations.
And
Japanese
maybe, you know, after
Kodai
25, after 20 years, we will see the different world.
Yeah, I myself just became director of a startup that was founded by 2 guys in their late 30s, one of whom worked for a blue chip Japanese company and another who worked for a very famous world-class consulting company. And I think I decided to get involved with them because I was really excited about that idea that 2 young Japanese guys could risk everything. You know, they had very solid career paths to start something new. There is a question in the box that is really direct, and I'm going to ask it to everybody to respond. This gentleman says, why do we need foreign CEOs in Japan? Who wants to take a stab at that one?
Maybe I can try to answer to that great question, I think. because of that culture difference, Japanese have like a shigarami. I don't know how to translate that into English. Steve, please help me. But Japanese have a lot of shigarami. So sometimes when we need to change dramatically, we can't because we have too much conflict of interest because we are living in this internally closed society. So, like the end of the Edo era, we invited a lot of foreigners so that we can learn from foreigners. So I think, that's the reason why, some of the Japanese companies started to recruit the non-Japanese.
Well, that goes with my research about foreign CEOs. Usually the foreign CEO is brought in because he can do something, whether it's selling a subsidiary or firing people that the Japanese person couldn't do.
Yeah, but I think that the difficult part is that many Japanese employees think that, okay, we have a new non-Japanese CEO. He can make the change, but that's a wrong idea. The people, Japanese employees should change themselves. I think that's where we stand.
Yeah, I totally agree. And I think also if you cannot find, if you're a company that's in a crisis and that needs a leader to come in and lead and drive change, and you don't have a Japanese leader who can do that and who can do that credibly, then the only other option is to bring in a foreigner who can come in, make some very difficult decisions, but there's risks with that. If you can bring in a Japanese who can actually spend the time building the internal trust and credibility and then bring the employees along with that change journey, that's great. But unfortunately, the number of Japanese executives who can actually do that is still very limited. But then you run the risk of organ rejection with the non-Japanese who blow things up too quickly, shall we say.
I'm being told we have 3 minutes left. So could I ask each of you to make a final observation that will leave our audience gasping? Maybe I could start with Jamie.
Okay, so let's do a little advertisement for Columbia Business School. My personal opinion is if more Japanese would apply to Columbia Business School and were not discriminated against when they return to Japan as gaijinized, I think Japan would not need foreign executives at all. They would have Japanese executives who understand Western culture and Japanese culture and understand how to use both to their best.
Yeah, I mean, Jamie is being very generous because he teaches at NYU Business School. But thank you for the plug, Jamie. Tsukuda-san, do you have any final comment?
Yes, as I told before, I think compensation matters, but appointing the right CEO is very important. Yeah, that's my last comment.
I agree with you, and I would also say that it's how the CEO decides to interact with the board and with the outside directors. It doesn't matter what the structure is.
Yeah.
It matters the compensation, but that's the key thing for me. Stephen, you have the last.
Yeah, I'd add in, beyond Columbia Business School, also definitely SIPA. We need more Japanese there, so very internationally minded and so forth. But no, I just say it's a work in process, and we really need Japanese companies to focus more on developing truly global talent. Japanese CEOs who are recruited to be a CEO in the US or in Europe or for a foreign company. And I think if we get to that stage, we will have made a lot of progress.
That's great. The first thing I have to do is to remind the journalists in the audience that Mr. Greenberg's comments are off the record. The video will be posted in a few weeks and you can watch it then there, but please don't quote him tonight on his comments. And the last thing I have to do is to thank Jamie and Tsukuda-san and Stephen for their time and sharing with us all of the deep insights and the great experience they've had. These are 3 great guys. You need to go online and research their bios, everybody. So with that, I'd just like to thank everybody for tuning in. And I'd like to take the opportunity to thank our corporate sponsors who you see on this slide. These sponsors are important to us. So they're a very special group of people, and we want to thank them all. And we want to thank you for tuning in tonight and hope that we'll see you again at another event very soon. Thank you.